If you're thinking about buying a home, this video is going to be for you. And if you've already started the process, this video is especially for you because these are the things that are happening inside the process for many buyers right now that nobody's going to tell you until it's too late. My name is Eric Hamilton. I am a mortgage advisor in Illinois. I'm a top 1% lender in the country. I've helped thousands of first-time home buyers through this process, and this video is going to help you complete and understand the home buying process step by step, including parts that most lenders never explain. Here is something that nobody in this industry will say actually on camera. Everyone that's helping you buy a home gets paid when the deal closes. Your agent, your lender, the title company, every single one of us will get paid once the deal closes. That does not make them your enemy, but nobody's job is to slow this process down for you. And one of the most important things in a market where homes are selling as quickly as they are is we have to slow down the process up front to make sure you understand the process and can digest and make good decisions as you move forward. So what I see over and over again is first-time home buyers making the same mistake over and over. Not because they're careless, just that nobody walked them through it first. So most people learn this process by going through it, and that is backwards. This video, I hope, is going to fix that. And I'm going to break it up into 6 steps with real numbers and no fluff. So here are the 6 steps on how to buy a house step by step, how I break it down for my buyers. So step 1 is you have to know your numbers before you talk to anyone. Step 2, you have to get a real mortgage pre-approval, not just a pre-qualification or a fake one. We keep seeing these things going around where they mean nothing more than the paper that they're written on. Step 3 is you got to find the right home in a low inventory market, and that is very difficult to do in the current market. We have a lot less inventory. Step 4 is you got to make an offer that actually wins and have a strategy to win that offer. Step 5, you have to understand what is happening in the 30 days after you go under contract. And if you wait to understand that process, you're going to be overwhelmed very quickly. Step 6, get to the closing table and know every dollar that you are signing before you get there. So step 1 is know your numbers. This is where you're going to have to pull your credit score yourself before any lender pulls it. You can get a free credit report to pull your credit report. It's not necessarily going to have a score. It's not about understanding the score up front, okay? What it's about is understanding what's on your credit, what debt do you have, is there anything in there you're not aware of? This is something that you should be checking multiple times throughout the year. You also want to understand, so credit score is going to be one piece. The next number is your cash, down payment, and closing cost. And having some reserves. How much money do you have saved? Do you know how much money you're going to need for down payment? Do you know how much you need for closing costs? You have to start understanding those numbers up front. You also have to understand your debt to income. So what kind of monthly debt are you working with right now? And make sure you're discussing this with your lender. You're going to want to know up front what your credit score is, how much cash you're going to need for down payment, what is my debt to income. And if you know all of this before you ever see a home and you understand your numbers and you know where monthly payments are going to be, you're going to avoid about 90% of the issues that most people have when buying a home. On a $350,000 home, most first-time home buyers roughly need anywhere between $20,000 to $25,000 and maybe even up to $30,000 total, depending on their program with no down payment assistance to be able to get from point A to point B. That's how much they're going to need. But every situation is different. And that's why understanding your numbers are always the first step that you want to know and understand. And this is one critical point I will say. You want to understand these numbers before ever seeing a home. Once you see a home, your decisions are not rational anymore. They're made emotionally. And you want to make decisions on numbers before you ever see a home. So it's important, step 1, to know your numbers. This is another thing to keep in mind. On credit score, we just had a scenario where a 40-point difference in credit score, so we knew the numbers up front, we updated the credit score, it's going to save them around $36,000 over the life of the loan. So waiting 90 days, this client is going to wait 90 days to build up their score, and what that's going to do is going to help them get a much better rate and a lower payment overall, and it's going to save them $36,000 over the life of the loan. What I want you to think about right now is where you are right now in the process, okay? Comment below, just starting, looking at homes, already under contract. I read all of these comments, and if you're under contract or you have a question, I will go ahead and answer it personally. So step 2 is getting pre-approved, not pre-qualified. And there's 3 tiers, and we're going to go through each one, and we're going to separate what's important, what's not important, and what you should do. So pre-qualification is the first step, and that's always self-reported numbers. Nothing's verified. You just give your information to a lender. They take it down. And this is, for most parts of the process, pretty much meaningless, okay? Then the next step is you have a mortgage pre-approval. The lender checks your income, your assets, and your credit, and you're essentially conditionally approved based on what the lender has reviewed. Then the third option, which was what we recommend and something we do internally with our team, is a fully underwritten pre-approval. Okay, so let me say that again, a fully underwritten pre-approval. Underwritten is the key word. Remember, a loan officer is not an underwriter, okay? So on a fully underwritten pre-approval, we are sending your approval to an underwriter to review and approve the income and the assets, okay? You should ask your lender up front, will an underwriter review my file before I make any offers? If that person responds, oh, no, we don't need that, that to me is a red flag. A pre-approval with an underwriting approval is extremely important in the current market. Step 3 is finding the right home. Okay, so this is important to keep in mind. In Illinois right now, inventory is about 70% less today than it was in 2019. So good homes that hit the market are selling in 24, 48, 72 hours with multiple offers. So finding the right home is a challenge, okay? The buyer who wins right now is going to be ready well before the house ever hit the market. Let me say that again. The buyer who wins in the market today is going to be the person who had the approval done, the commitment letter done. They know their numbers, they know their cash to close, and they're making an offer, and they're getting the offer accepted because they are more prepared than everyone else. For first-time home buyers, okay, you want to write 2 lists, okay, before you see one house, okay? You want to write your non-negotiables and then everything else. Know the difference before you get emotionally invested. And what I mean by that is once you start looking at homes, you start thinking emotionally, and emotional decisions in a very fast market like we're in, where you have to make fast decisions, okay, become very expensive decisions. Step 4 is make an offer. Okay, so most buyers think the highest price wins. What I will tell you is we get offers accepted every single day that aren't the highest offer. Certainty is what wins, okay? So sellers want certainty more than they want the highest price number. Everyone is going over list price. But if that offer does not close, or it provides more stress to a seller, or it's just a pre-qualification or not a pre-approval, that is risk and does not provide certainty. Approval strength, flexible closing dates, and shorter inspection windows help win multiple offers. These home buying tips cost you nothing. They win offers. You need to write an offer you can live with, whether it wins or it loses. Strategy always beats emotion at the offer table. There's something up on the screen. Okay, I'm going to start. Let me just get some water while I take a break.
I don't know why that popped up.
No, you're good. So save this video right now. What I'm about to walk you through is the part of the home buying process that confuses people the most. And once you understand it, you will never stress about it again. So step number 5 is being under contract. The 30-day stretch or 2-week stretch, whatever your closing is, you know, what we want to do is we want to make sure we take away fear and we provide a little bit of clarity. After your offer accepted, there's really 3 things that happen. There's going to be a home inspection, there's going to be an appraisal, and then there's going to be an underwriting. And obviously, there's a lot of other little things in there, but the 3 main things that we want to be concerned about is inspection, appraisal, and underwriting. So the home inspection, you know, you are hiring someone to find everything wrong with the house. That is the whole point. Your inspector's going in there and going through the house, and checking everything. Has nothing to do with value. The appraisal is what the lender sends out to confirm that the home is worth what you're paying. They're going to have a copy of the contract, and they're going to confirm that the price that you are offering in an offer accepted is confirming that the bank is willing to lend the money at that sales price, okay? If it does come in low, you have the ability to negotiate if you did not waive that right. Renegotiate the price, or you can walk. And now, if you waive that right, that is something you're going to want to talk about with your attorney. It's a very real risk in a market where we're going over list price. So you have options. You just have to discuss with your realtor and attorney what options you are foregoing or waiving and options you have after contract. Then comes underwriting. And this is the part that really kind of freaks everyone out a little bit, because we do the pre-approval up front, underwriter approves it. Well, now the underwriter has to see it again and confirm everything, okay? And here's what underwriting actually is. It's actual human being, okay, and sometimes some AI technology that's reviewing your full financial life, your income, your savings, your debt, your job, all of it. It's not that we don't trust you. It's that a lot of times the government doesn't trust us, and these loans are audited, and we are just confirming what information you have provided is accurate and up to date. We're also confirming that you can, the ability to repay, that we're not putting you in a position outside of your comfort level. They want to make sure that you can afford this and it's in your best interest. You will get conditions, okay, or more work that's required after the underwriter reviews the file. This is a basic to-do list, very common, and nothing to be concerned about. You're never going to get typically a clear to close in that first underwriting review. In the best case scenario, the underwriter is going to issue the initial approval and then the final approval. One thing to keep in mind is there's going to be some more documentation that's needed, maybe some explanations. There's also information from the seller that we don't have yet that will be required, that you have nothing to do with, that we will request from the seller. Getting conditions does not mean you are denied. It means they are doing their job, meaning if they have additional questions about a bank statement or a deposit, very normal part of the process. Think of it like this. They're not stopping you from trying to buy a house. They're trying to make sure you do not buy a house you cannot afford. This is actually someone looking out for you once in this whole process, and that's what an underwriter does. They're looking out to make sure that this is in your best interest. The mortgage underwriting process usually takes 2 to 3 days in a perfect world. Your one job is to respond to every request the same day you receive it. I can't stress this enough. A lot of times buyers will put themselves in a bad position by delaying those responses. So the other thing is you do not want to open new trade lines. It's natural. You want to buy furniture. You want to buy things for the house. Do not do that until your loan is fully approved and closed. It's what we always recommend. Do not change jobs. Do not make any big purchases. If there's something that comes up, you have to speak about it with your loan officer. Speed kills delays. Silence kills deals. So you have to remember that the more you respond and the quicker you respond, the better your experience is going to be. Step 6 is closing day. Okay. So, we hear a term that's called clear to close. What does it mean? This is the finish line. Clear to close means the underwriter has approved your file in full. Everything's been received from the seller, from you, and you are done. Okay. Now, you're going to have a final walkthrough 24 to 48 hours before closing. You're going to confirm everything is still the same when you go through that house, and everything is ready for closing. Closing day is important, okay? You want to set aside some time. Remember, this is the single biggest purchase of your life. If it's your first purchase, you want to sit down with your attorney and go through the paperwork. You want to understand what you're signing. You're going to be signing a lot of paper. I know it's a pain to take off work. I know it's a pain to be present. You have work, you got travel, you have kids. Set aside time to go to your closing. You have options to do power of attorney. I always recommend to attend the closing. Then when you're at the title company, after funds are wired and confirmed and you sign all your paperwork, they're going to have the lender make one final approval of the paperwork and then the loan funds, and you get your keys. That's it. That is a home buying process broken down quickly from start to finish. This is the thing that I will say, as you move forward. The home buying process is not complicated. It just feels that way when nobody explains it. It feels that way when you don't do the work up front. The more work that you do up front, the better experience you're going to have, and the better you're going to be able to manage this process moving forward. And you want to be able to walk away feeling confident and having a good experience. The sad part is most people don't have a good experience buying their first home. The more work you do up front, the more clarity you're going to have. And this is what's going to change everything. If you know someone thinking about buying a home this year, send them this video. Not because it helps me, because they're going to go through it without understanding the process and how it can actually hurt them financially. If you're buying a home in Illinois this year, I have a website called 100homebuyers.com. It takes a few minutes to go to. You can fill out your name. We will reach out to you. There's no pitch. We look at your real numbers. We'll spend 15 minutes with you, help you build a plan. Whether you use us or not is not the point. We're on a mission to help 100 first-time home buyers this year. The link is in the description below. Every week, I'm going to post a video like this that's going to help first-time home buyers buy a home. Feel free to subscribe if that is something that you would find useful to you. And as always, please reach out to me 7 days a week from 7 in the morning till 11 o'clock at night. How long was that?